Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we break down the notable moves across financial markets in 20 minutes or less. We publish these shows every Friday, so make sure you are subscribed to our channel. Tune back in on the weekends so you never miss an episode. We're going to dive right into it here. I hope everybody's doing well. It was a fairly busy week out there. We had the jobs report out Friday. We had some company earnings releases, Mag 7, and some tariff back and forth. So this is the second week in a row where the market came in on a bit of a panic. So last week it was DeepSeek. This week it was the tariff uncertainty. The good news about this week, frankly both weeks, is that panic seemed to really kind of solidify the low at the start on Monday. So basically the market came in kind of freaking out, worried, and dip buyers kind of stepped back in, the selling abated, and the market grinded higher throughout the week. That was until Friday where the market started to get a little more worried. Now maybe they're gun shy holding over to the weekend, given the fact that we gapped down pretty sharply 2 weeks in a row, but it was really this tariff fear, this retaliation, this potential escalation of a trade war that is keeping the market on edge right now. So markets pulled back on Friday. We're going to get into that action in just a little bit. Gold is one place though that markets are, or investors are not afraid to allocate to, because gold continues to work right now, extending highs, following through on the breakout, and really seeing a pretty extended frothy move at this point. But it speaks to some of that uncertainty and where capital is rotating right now. We've got PPI, we've got CPI coming out next week, so some econ data for the market to chew on. We also are now starting to get into a fairly long period of sideways chop here. The market's broad indices really have not gone anywhere since the election. We're pretty much, if you look at the S&P 500, the same price we were kind of the week after the election back in November. And so we've spent a lot of time sort of digesting and going sideways here. And when I look back to some of the risks here on the market, I still think the Mag 7, I think, are technically in a vulnerable spot right now. And I think it poses a risk specifically to the Nasdaq 100 right now. I put on a trade for that thesis. I'm going to talk about it later in the show. Now, before we get into the show, though, we got to shout out our sponsor, Investors Business Daily. They help support the show. We've got links in the bottom here where you can get access to their Market Surge platform, where I do all of my fundamental research and really start to learn more about what the heck companies are putting out there in terms of profitability, earnings growth, all that good stuff. And then they also have their IBD Digital. Check them out with the links in the description of the show or at the bottom of your screen. And now let's get into the show. All right, here we go. We've got some charts in front of us. Warden TC 2000, that is a charting platform we're using in this episode. It's a platform we have lots of cool tools and indicators, layouts built for. And if you're a new user, we also have a referral link for you in the description of this show. Check it out below in the description, and then check out our website, thetraderist.com. See all those little goodies you have available to download. Let's get into the numbers here. You can see 1 week returns was mixed, but mostly negative here for markets. And like we said at the top of the show, most of that negativity was coming off of Friday's session. Minus Friday, we would have had green across the board. If we take a look at volatility here, you can see it was mostly lower this week. Again, we did get some of econ data and some earnings, bulk of earnings through this week, so that does make sense that we do see some of the deflation there in volatility. Now, if we take a look under the hood here, market breadth, not too shabby. We had most sectors here in the green. Again, not by any wide margin, but it was real estate at the top of the list here, up 1.33%, followed by energy and tech. On the downside, it was really consumer discretionary getting hit the hardest there. If we take a look at our sector trends, so this is our smart trend filter indicator. This is on a daily time frame. You can see that we do have lots of daily trends that are still positive here. Notably, financials right here in the kind of middle of your screen continues to be one of the strongest spots in the market right now. Healthcare has certainly rebounded nicely. And again, you can see real estate in the top right here starting to move back up. So that is positive, encouraging. If we look at the top left here, you do have tech. It did finally transition here on Friday back to that upswing, but it is still in a dicey spot. Remember, technology is kind of the heaviest weighting here in market cap land in terms of the S&P, Nasdaq, of course. So what tech is doing really does matter to this market. Now, if we take a look at market breadth here and we look at our 52-week highs and lows, we get a little bit of uncertainty here going into the weekend. So we see a slight uptick in the number of stocks hitting 52-week lows on Friday. You see a dry spell here on Friday for the number of stocks hitting 52-week highs. So this ratio is still in very muted, sort of subdued territory. I try not to overanalyze it when we're in a state like this. You're not getting a ton of new highs. You're not getting a ton of new lows. It's kind of just sitting in the middle, and we're waiting for some more clarity here. And I still think that's kind of the case. There's not really any good convincing winner here at this point. I'd say bulls maybe still have the slight edge, but it's slight and minor. So let's continue to keep an eye on it, but I guess a little bit of into the penalty box here for buyers this week as we look at those ratios. Now, if we take a quick look here at I wanted to look at our sectors on a relative strength basis again, just to illustrate this point. So these are ratio charts. This is a layout that's available on our website for TC2000 users, but this is a ratio chart looking at the individual spider sectors sort of divided by or relative to the S&P 500. And again, when we look here in the top left, this is technology, which has kind of been in the penalty box, not really being a leadership group for the market, which is an important leadership group to have because, again, it's most of the market at this point. So when we look at kind of the weakness here in tech, we say, what is picking up the slack right now? Because indexes are pretty much at highs or pretty close to highs, a couple of percent off. And really it's communication services here, which I believe you can mostly attribute to Meta supporting this right now. And if we look here, you also have a lot of strength in consumer discretionary, which Amazon had been pretty good there. And if we take a look at this box here, it's financials. Financials really are the strongest spot in this market. They continue to be. They have been for some time. So I just think those ratios are a little bit interesting there. Just kind of another view of what's going on underneath the hood. Now, let's take a look here at our macro slide and see what's happening here. So we did get the dollar index to pull back a little bit this week. The dollar index did strengthen on Friday, but net in the week it was down, so that was nice to see. We can also see that yields were a little bit lower this week as well. Again, continue to see a little bit of this choppy kind of downward pullback here for the 10-year treasury yield. What we don't want to see is the series of green dots to appear and a higher low get put in here for the 10-year and you know, the 10-year to continue its 6-month trend that's been higher. So we're going to want to keep a close eye on that. It looks a little bit like it wants to turn right here, but we're going to give the benefit of the doubt right now and just say that it's still in pullback mode. In terms of commodities here, copper, gold, silver, really strong weeks here. Oil was down yet again, and so was Bitcoin. So let's get into the charts now. Let's take a look at some of this price action here, and I want to make the case for a trade I put on here on the index. So we're going to kick it off here with the S&P 500. Here's the weekly chart. You can see we got a pretty good range this week. Again, we gapped lower to start the week. Let's in fact just go to a daily chart. So this is what I was saying at the beginning of the show, right? Last Monday, we had DeepSeek gap down here. Dip buyers showed up promptly. This Monday, we had tariff uncertainty and dip buyers showed up promptly. And this pattern here of up for 3 days, down Friday, up for 3 days, down Friday is really looking pretty, symmetrical right now. So what does it all mean? When we look here at the S&P 500, you do have, a couple of different scenarios here. like we've talked about, let's see, I got a lot of lines. I might have to start a new board here. But really, I mean, you're sideways in between, call it 58.50 and 6,100. You can see that anytime the market gets up towards these highs, we get spooked by something, recently tariffs. And so the market is a little bit reluctant right now to really push above these highs. And this might be the case, right? Because with a lot of the executive orders that are coming out and some of the uncertainty just behind Trump in general, I think the market is got to be careful here on, getting too enthusiastic about this market when you really don't know what's coming in the next couple of days from a new executive order or even just a new, social post out of the president. So right now we're seeing the tails. We're seeing some resistance up here around 6,100. The good news is you have a very clear line in the sand of some type of momentum break, some type of squeeze right here. If the market can get over 6,100, do it convincingly, ideally with some volume, then we're in business for this long holding pattern. Like we said, since the election, market is basically flat and sideways now for, call it 3.5 months. So it's got a lot of, kind of pent up, buyers and sellers that are all transacting over the last 3 months at the same relative price. So you're getting that spring that is getting coiled, compressed, and ready to expand in a certain direction right now. So right here in the immediate term, you've got a little bit of that loss of momentum here going into the weekend. Really, it's going to be on what happens this weekend. How do these tariffs get followed up? Are there retaliatory sort of measures put on the US, and how do we respond? So I think a lot of that's going to be driven right now by some of the foreign policy. And then we also have, of course, some of the inflation data and some of the economic data that we're going to be looking at next week. Earnings season, we're still in it, but it's, for the most part, the bulk of it, I think we got through this week, but you'll still see some companies reporting, of course, next week. So S&P 500, 6,100, 6,120 on the top end. I think that's very important. I think if you get a follow-through session downward on Monday, then the sellers are in control here to take us back into this range. I still think that, this messy range here, and really, let's go to the Nasdaq 100 to express this view. The Qs here look pretty similar, right? So the Nasdaq 100 is pretty correlated. We talked about, again, some of the highs up here. You can see that the Qs, little relative underperformance, didn't quite get back up to the December highs that they made late last year. And of course, you got the same stair-step kind of price action where we gapped down on Monday, dip buyers showed up, and then we, kind of reversed and sold off on Friday. So for me, I ended up initiating a short position here in the Nasdaq 100, which is not something I do often. I don't really take shots on the short side too often in my sort of discretionary trading account. So the way I sort of set up my trading is most of my, active trading is delegated to my 3 trading systems, Merlin, Lamerick, and Galahad. And then for my personal trading, I'm more of a position trader, trend follower on, just thematic sort of longer term plays, things that I like in the market. But I did move some funds in here into the close on Thursday, this morning on Friday, into a short position in the Nasdaq 100. Now, I'm not going to go live and die and go down swinging in this trade. It's a trade. I could 100% be wrong. And if I am wrong, then I'm probably going to be wrong if we start to move over maybe 535 or so, this general area. If the market starts to push over there, then I am out of this short trade. But I figured the reward to risk was pretty attractive here coming into Friday, coming into post, Mag 7, the last of the Mag 7 earnings announcements. I had some non-farm payroll risk here on Friday morning since I initiated a short on Thursday into the close. But fortunately, we started to turn around here, and I got some, some help there on that tariff uncertainty. The thesis behind this trade is a couple of things, and mostly it's driven by the sloppy price action. We're going to jump right to the Mag 7 here, and I've talked about this the last couple of weeks here, but I think the Mag 7 look about as worse. I can't remember the collective group looking this bad in quite some time. Now, look. these can all be saved, right? Like, the Fed turns around, inflation comes down, tariffs are out of the way. I mean, you're going to see a bid on all of these things. But when I look across these charts, let's take them one by one. I think we did this last week, but I'll still show them here again. Apple looks like a disaster, generally speaking. It sold off pretty aggressively, broke some support. Looks like it's kind of just ready to roll over again. So there's nothing too exciting there. Microsoft looks, again, it's just nowhere. It's totally sideways, but look at this price action here. You've got this big gap down, never got filled. This looks ready to sort of roll here. If we look at NVIDIA, this was the saving grace. I mean, if NVIDIA was not up 7% this week, the Qs would have been down a lot more, but NVIDIA did get a nice rebound here, but this price action to me still looks really rough. There looks like there's a lot of overhead supply up here. There's still a big gap. So we shall see. Earnings TBD on this. This is still a late earnings reporter. So NVIDIA's got some short-term momentum, but it still doesn't look structurally that good. Google was my favorite. I mean, Google looked good, and that was until they reported earnings this week, which really sort of kind of blew up the short-term technical picture here. We had some potential saving kind of price action Wednesday and Thursday, but then of course Friday we kind of progressed lower here, and now we're kind of a tale of two gaps here for Google, with a lot of sideways supply here. So Google, even though I actually like the story here, and I am interested in Google, but it technically now is a little bit damaged there. If we go to Amazon, they reported earnings this week. And again, they kind of threw their trajectory off where they broke some of these short-term levels. It was holding up well. We'll give, credit where credit's due. Amazon is still in an uptrend here. And look, it's very mild technical damage, but the point is we have kind of rolling breaks here in various degrees across the Mag 7. So Amazon, slightly in the penalty box, but still not a terrible looking chart there. I'll give the bulls that. Meta continues to be the strongest here, without a doubt. Just continues to grind higher. This looks like a Palantir, it just continues to grind up here. There's really not much else to say about it. It's extended, but that does not mean it needs to come down. So this continues to work here. Meta bulls are getting rewarded. Congratulations there. And then you've got Tesla, which doesn't look terrible, but it's still just grinding lower here. So all is to say, you've got the 7 biggest companies here that we've just saw all of their earnings reports come out. And all of those charts look a little bit tired, to say the least, to me. And I think that sets up, again, some of this potential breakdown topping action here in the NDX, in the Nasdaq 100, if those Mag 7 cannot continue, not stabilize here. So QQQ, I think, is, again, just a attractive spot here, coming into this spot to trade against new highs, looking at that Mag 7 weakness, looking at the tariff uncertainty here, looking at still some unsettling interest rate pictures and the uncertainty of President Trump. I think you just have a decent spot to take a shot at the short side. So, like I say, I could absolutely be wrong here. I plan to be wrong half the time, right? So this position, we'll see how it goes. I won't update this position until next Friday, of course. So, I may well be covering some of this if we move lower. I may be covering some as we move a little bit higher here. So just keep that in mind. It's a trade, but that's what I'm seeing here. I'm going to look for follow through action lower and see if this QQQ trade can start to materialize and build on itself. So that's the bet I took this week. If we look at the Russell 2000 here, it's kind of just going sideways. Again, had the same pattern of buying up throughout the week, and then it kind of sold off a little bit on Friday. It's kind of sitting here in no man's land. It's right around this 226 area, but really, we just got to get some more momentum behind this trade, just the equity trade in general, and I don't know what that next catalyst is just yet. If you take a look at some of the volume pictures here, you are seeing more of that heavier volume trading on down days, which isn't ideal, but I don't really have any strong opinions on Russell 2000 at this point in time. So that's the big macro picture. We talked about the Mag 7 already. Let's finish it off with USO. We talked about oil last week. We talked about the fact that it was, kind of compressing right in here. Well, this compression is kind of continuing here, and we're not really getting any good resolve just yet. Of course, again, President Trump has made it pretty clear he wants to see cheaper oil prices. So market perhaps reacting to that, but you do still have kind of this technical bottoming, basing, decent looking chart pattern here. I don't have any skin in the game, so I don't own it, but it looks pretty attractive here from a trader's perspective. But it needs that momentum. It needs to actually lift higher if we're going to see that kick into motion. Gold here continues to work. Again, just tremendous kind of move here. Look at the volume coming in this week. So it's, pretty extended here. I do still own some, but it's kind of in our fixed position list here. So I'm not really, we would trade around it, but it's not that, not a big enough position where we would trim some yet. So congrats to the bulls there. That continues to work. It's extended, but it's clearly where a lot of rotation's happening.